Welcome to another episode of the Real Estate Ballers Show. If you are new here, my name is Vee Lee. This is the show where I interview upcomers, doers, and ballers of the real estate investing world. The purpose is to help you to reach your financial freedom in real estate investing faster. Today's guest is Sammy Abdallah from Detroit. And whatever you've heard about Detroit, that's probably true. Okay, maybe not all. Most guests that we have talked to on the shows are from thriving markets, with growing populations. However, that isn't the case in Detroit. Join us as Sammy shares his challenges in his market, and do listen all the way for some really heartfelt moments that we had during the interview with Sammy. Okay. Hey, Sammy. Hey, Adam.
What's going on, Vee?
Hello,
It's
everybody.
a perfect world out here. So, Sammy, can you give the audience a quick introduction?
Absolutely. Yeah. Well, first of all, thank you for having me today. It's an honor to be invited onto the show. My name is Sammy Abdallah. I'm up here in the Detroit area, born and raised up here in Detroit. And I've been in the business now for 15 years, I would say. The main way I pay my bills is by being a full-time investor. And like a lot of our colleagues out there, I'm also a real estate broker in support of that mission. And I have a real strong background in distressed properties. And whether that was working through the recession and the foreclosure crisis with the lenders and being knee deep in that whole thing, to dealing with distressed property that we all deal with on a daily basis. So 15 years of success. And we're still going strong in a market that nobody thought that we could do it in. And here we are.
And Sammy, when you say we, can you tell people what your org structure looks like?
Yeah, we can't forget my partner, Freddy. So on the investment side, I have a 50-50 partnership with Freddy Antar. And him and I have been childhood friends, and we grew up together, and we kind of always hustled together, and this kind of organically grew. But him and I split responsibilities pretty evenly. You know, he's on the buying side. He's what we would traditionally call like out in the field services. And then I'm mostly in the office and handling a lot of the selling, valuations and contracts and title work and things like that. We've got a couple of full-time admins that support those tasks. And we've got a runner, and then we've got a very extensive vendor and subcontractor network. And we employ tons of people indirectly on that end. So we're blessed to have really good people around us, allow us to do a lot.
So, Sammy, you've been in the single-family real estate investing space for 15 years, you said?
Yeah, 15 years, maybe even a little bit longer. But I would call it a solid 15 years in single family.
So you got in a little bit before 2008?
Yeah. Just like my first house that I purchased was maybe 2006, and it was just like a one-off thing. And it was just right before all hell broke loose.
So give us a quick, what was Detroit like in 2008?
It was, going into it, I mean, it's a great question, by the way. Going into it, we were a town full of optimism, and things were on the upswing. At least we thought they were. We had a young hotshot mayor, Kilpatrick. We had just hosted the Super Bowl. We had WrestleMania in town. We had All-Star Game in town. We had so much going on. And then it was like the music just stopped. And it really was a shocking moment, because in Detroit, it was very sudden. It was very abrupt. It wasn't like we weren't eased into it. It was just like, hey, we're partying one day. The next day, half the neighborhood's on fire.
Are you more of a buy and hold market or buy and flip?
Well, we're blessed. We get to do all of it, because there are still communities that have super strong ROI. I'm talking like 10% plus. And those offer amazing opportunities for buy and hold. But we've done really well with our fix and flip business in the suburbs. And over the past, I'd say 4 to 5 years, we've been able to do that in Detroit, which was unthinkable just a decade ago. We're able to do fix and flip and invest some real money over there. So we get a good variety of deals here.
So, Sammy, in this last 2 years, a lot of people have moved because they've realized that they can work from different places, and they've got different configurations of homes they need if they're working from home and all that. So we're seeing a big shifts in population into certain parts of the country. And when Vee and I are talking with people where they've had an influx of people, they've shared stories with really big price jumps really quickly. The deposits on buying houses has gotten really high. It's gone just totally out of whack. And Detroit's roughly neutral in its population shift. Can you talk a little bit about if that's correct with the suburbs? And then what has that done with your market in terms of pricing or deposits and how people are buying and selling homes?
Well, I think that you said it, our population growth is kind of in neutral. And for us, that's a pretty big accomplishment because for so long we were losing population. But we've got a very old housing stock in the Metro Detroit region. A lot of the whole area was built up in the post-World War II boom. And so a lot of the homes have become functionally obsolescent. That's it. They're obsolete. And that was exacerbated in the pandemic when people were trying to move out of these, what we'd consider starter homes. And there was a big shift towards, I need an office, or I need a play space, I need a family room. That created some pressure. Also, the strong economic outlook that we've got here regionally, that created some pressure on the housing stock, and that increased prices because we had this, I call it millennials. I think that's the best way to describe them in terms of the demographic. They had some upward mobility. The money was flowing, and they put a lot of pressure on the housing stock, and prices did jump. Now, we were affordable to begin with, and I would still consider us affordable, but there was a bit of a frenzy, and that it became a problem. When you start seeing sales regularly north of 3 or 4 or 500,000 in certain communities, which is strange for us. And then the deposits followed, and the competitiveness really increased, and people were waiving private inspections. And I'll give you 10% of deposit. I'll give you 50% deposit. I'll pay cash. We experience a lot of those conditions here locally, definitely. But is it as bad as some of the other areas in the country? Absolutely not. Rural affordability, in terms of affordability, we're still solid. The old trajectory where we were seeing double-digit increases, let's say, up until fourth quarter last year, we were probably going to see an affordability crisis. But now we're down from like 20% year-over-year increases in value to like 5 or 6 or 7. So we're okay. We've stabilized a bit. I'm hoping the craziness is behind us, and it's still a great place to buy a house and raise a family.
I was reading an article last week, and it was talking about the market's turning, and it has like how much of a market is overpriced on that chart. It was shocking to see they had Houston at 41% overpriced, and they had Austin at 71% overpriced. I want to go back and look at what Detroit is on that chart, just so, just for the purpose of our conversation here. So we all around the country experience this tremendous appreciation. How is that in Detroit, compared to the rest of the country?
In terms of our region, you've got the city of Detroit proper, and then you've got Metro Detroit. And it's a hard border in terms of values and the differences in the communities in terms of housing stock and all those different things that go along with it. So within the city limits, nobody complained. I mean, we're still making up for lost ground, right? We had lost so much value over the Great Recession and over that whole period of time that we could probably sustain this for another 5 years and be okay. And it's really, in that time period, it's really opened up a ton of opportunities in the lending space. It's opened up a lot of capital. It's created new opportunities in new neighborhoods for fix and flip and buy and hold. So it's been a really positive development within the city limits. Outside the city limits and some of the suburbs, it was scary for a minute because the pressure on some of these more desirable suburbs there's no way to explain it other than a frenzy. Like, it was a madness. People were doing things that were inexplainable. So we were worried about that becoming a problem, but there's a lot of folks that bought and aren't complaining right now because they've got all this extra equity. And there's a lot of folks that should have bought, wish they had bought, but now are kind of priced out a little bit, or because the interest rates are where they're at, they have to take a breather. All in all, I'd say, guys, it's a mixed bag, right? It's depending on your perspective, it could be really good for you or it could be really bad for you. But I don't think anybody would dispute the fact that the strong housing market is good for the country. We're okay.
When COVID first hit, I was so confident that it was going to be this great buyer's market because everything was going to be shucking and jiving. I sat on the sidelines and I burned through maybe 3 or 4 months of the year because I just couldn't believe what I was seeing, that it had become the exact opposite of this extreme seller's market. So it took me a little while to recalibrate how I operated. So with that in mind, did you make any changes in this last 6 to 12 months about how you operated, or are you and Freddie planning on making any adjustments or doing anything to sort of hedge against potential risks of a shifting market?
This episode is brought to you by Buzz Vacation Rentals, a premier property management company in Houston and Galveston area. Buzz Vacation Rentals specializes in managing short-term rentals the right way. Give Buzz a call at 281-549-8432 to learn more, or check out their website at buzzvacationrentals.com. That is buzzvacationrentals.com. Now back to the Real Estate Ballers show.
Yeah, that's an awesome question, Adam. I tell you this, there was a time when we were certain about market conditions and what was happening nationally and internationally. I think we took those times for granted, and we have grown accustomed to living in a certain state of uncertainty, right? Like it's almost perpetual uncertainty post-COVID. And what we learned at the onset of the pandemic, just like you, we were stunned, and we did take a bit of a break in the early days. And we're like, we have to sit on the sideline because the overhead, the budgets, the numbers that we work with on a daily basis, it doesn't take much to knock us out of the game. And in terms of a crisis. So we did take a step back, which I totally regret, but we immediately, it was like a 1 month thing. We immediately jumped back in and we were able to overcome that. But yeah, there was a lull, our pipeline dried up just a little bit. And from that experience, our biggest takeaway, it was basically consistency in our approach and trusting the process. And that's what I preach to those that we mentor. And we tell them that if you've got sound processes in place and you're confident in those processes and you spend the time and you nurture them, it'll deliver results regardless of the market conditions. And that would be my biggest takeaway. And as we entered into this year, we may not have a global pandemic, but we do have a ton of uncertainty domestically and internationally, obviously. And I think that's impacting certain consumer behaviors. But the lesson that I've taken away and the lessons that we're applying now, today, is confidence, consistency, and making sure you have sound processes in place. No fancy gimmicks, no cool, unique systems. All we're doing is we're advertising to who needs to see us and hear from us. We're making sure we're talking to them regularly. We're making sure everybody's getting followed up on. We're making sure everybody who can get an offer is getting an offer. The simple things. And these simple things are tried and tested. Regardless of what's going on out here, they deliver results. I think we'd all agree. Maybe the prices change, maybe the numbers change and fluctuate, right? But if you're doing the right things, the outcome will be hopefully a profitable business.
I find that the biggest challenge for us investors or the people that we help in the team is that as the market turn, right? Just when COVID first hit and everything skyrocketed, we were not making high enough offers, so we were losing out on deals. Now we're starting to experience the other turn where we need to make lower offer, but that also going to cause us to lose out on deals. How do you handle that situation?
Yeah, it seems like us three on this call, we're all in sync. And I preface what I'm going to say with this. I'll be sure to calm everybody's nerves out there because there isn't a crisis on the horizon. From my perspective, I think it's like I mentioned the word frenzy. I think we had a frenzy. And people were doing things and the decisions they were making were driven by things that were outside of economic considerations. And that started like when the pandemic took off. And we made adjustments. Sometimes it felt like we were making them too late to increase our offers because we were getting beat out so often when it was as hot as it could get. But then we noticed that we had a couple of buys that we made in that period of time. And I'll just to put it out there in our market, I feel it peaked, let's say fourth quarter last year. I think that's where it really peaked. But there were properties in our inventory that we had paid a certain price for. We found that we went to sell them. They weren't moving like we anticipated. And that was the warning flag number one. And we always said in the short term, there'll probably be some deals that you're gonna take a beating on. And we started to feel that. So now that we are seeing the trend going the other way, we are going back to basics, as I mentioned. We're just kind of going back to our original formulas, We're not being as aggressive. We're generous with our offers. It is what it is. This is the market. These are the market conditions. We're still seeing multiple offers. We're still seeing highest and best. We're still seeing over asking in some scenarios. You can't run a business depending on it. And value increases are no longer going to cover for mistakes. So we're just playing it safe. We're still pretty aggressive, but nowhere near where we were in terms of the height of the frenzy for us. But we're making adjustments, definitely.
Sammy, I've got two theories I'm going to pitch at you, and you tell me if you buy into these or not. So the first theory is that when jobs were all shifting, a lot of people went and became real estate investor flippers, HGTV and all these other reasons, and they had that on their mind. And they did it, and even though they made all these mistakes and it took them longer to do a rehab than it should have, that actually played in their favor because the market appreciated faster than their mistakes cost them money. And so they were better by being worse at that point.
Bingo.
But it may start to turn the other way. And then that may shuffle people out of this space. Do you agree with that or not agree with that?
Oh my God, I wholeheartedly agree with that. I think we've all, anybody who's actively an investor like we are, you've seen it. You've seen it happen in real time in front of you.
Yeah.
I agree 100%. And hopefully, and I don't wish bad on anybody, but we've seen this before when the recession hit and it really took grip. When it settled in and people really became aware that, hey, this is here, it's not going anywhere. There's no light at the end of the tunnel. That's how you feel at the beginning of it. We lost a ton of real estate agents, right? We've seen the same thing happen with real estate agents recently, where they all big rush at one point we had more agents than active properties or properties for sale. So I think that's a stat that a lot of people have been throwing around. So the strong will survive. I mean, I'm trying to be politically correct about it, but only the strong will survive.
Okay, so that's theory number one. Here's the next theory. Now this
Adam and his theories.
Here's the next theory. And this one may be more nuanced and maybe you may want to push back. We'll see. So this has to do with the decision for highest and best use, whether to flip a house or to get rid of the house and make it into a new build or split a parcel and make new builds. So if you're going to get rid of a house and go new build, you need a certain price point of market valuation for it to be able to work. And so in lower cost areas, doing one house at a time doesn't work as a new build. But all of a sudden, if you have an appreciation that goes up 20 or 25%, a house that 3 years ago or a land that wouldn't have held up on that now is holding up on it. And so we're now seeing different markets that are sort of in that middle zone suddenly have more new builds. And we still have our lowest price markets still not have stuff knocked down and turned into new builds. Do you agree with it? And do you see it? And where does Detroit land in that? Because Detroit's traditionally been a lower priced space.
So I'm 50-50 on that. There's definitely some truths there because we did see that phenomenon repeat itself here locally. And it did also happen pre-recession. And we call those backfills and I don't know if that's a national term, but we call it here locally backfills. And that's what happens. Prices go up to a certain point where it makes sense to just add square footage basically and milk it for all it's worth. I think it was tamed a bit this year or this time around because so many of these other numbers, these other costs went up with it, like the construction costs, for instance, and the supply chain issues. So that calmed it down a bit in our market because our ceiling is a lot lower than other markets. I also think that in some of the lower price markets, let's say a Detroit per se, it's about the need or the usage of the future use of the property. And I think not enough attention is paid to that and the needs of the community. And I'm talking purely from a business perspective. If I'm going to enter into a community, I'm going to say, what are their needs? I know that, for instance, in Detroit, not many people are going to be able to afford a backfill new construction or something. They need apartments. They need affordable housing, but that doesn't need to mean, we're partnering up with Section 8 or we're doing something like that. It could just mean we just need some 3-bedroom, 1-bath, 1,000 square foot homes on a slab, So you're right. It's much more nuanced. I think it's market specific. I think it has to do with also a lack of financing available for these alternative projects I've described. Not a lot of people are willing to step in and fund them. But yes and no. Is that fair?
That's fair.
Yeah.
So speaking of financing in Texas, obviously we are a very robust market. So it's all kinds of options. Do you guys have these local community banks in your area too, or is it just mostly national lender?
That's a good question. I'll tell you this. financing has always been very challenging for us here in our region because of the low values to begin with. You know, it wasn't even profitable for them. So I mean, there's the longest time where, you know, your minimum loan amount, let's say on a single fix and flip, was like $75K. We couldn't even meet that. So we were working a lot with cash and scrounging up and local investors and all that. So that has improved. There has been, as we all know, a rush of national lenders that have entered into the space, and that's really created a lot of good opportunity for us. But locally, we don't have that. A lot of the banks here in our region were geared towards different types of businesses like auto suppliers and manufacturing and warehousing. And, you know, nobody really wanted to enter into our space too much. They felt the risk was a bit too high. We were totally burned, you know, 08 to 2012, right? I mean, nobody exited that unscathed. Everybody took a loss in Detroit. Everybody. People don't forget that. So that really played a huge role in the availability of financing for us, because we were like, you know, the black sheep. You know, the last time we did business with you guys, the world damn near came to an end. You know, we lost every penny and then some in Detroit. So it was extraordinarily challenging, and it still is. Like, to be honest with you, we can't get a working line of credit if our lives depended on it, because the first thing they say to us is, you're an investor, you're going to buy houses with that, and we want first lien on those houses. So we're not comfortable extending you this line of credit. No matter what, no matter the fact that we have strong finances and all the great stuff, we are a lender's dream, but they'd rather have first lien on all these properties, and they don't believe we're going to use it for working capital or for expansion or whatnot. So yeah, it's tough up here, definitely. You'll probably hear that.
You really remind me not to take things for granted where I am here. Being in in an established market like Houston, you know, things is within reach. You know, you have a bunch of Harmony lenders, and we have more local banks that are willing to loan to ugly houses, you know. How is that in your market, Adam? Like, are you more like Houston, or are you more like Detroit?
We're exactly like Houston.
Okay.
Yeah.
Yes.
And it's just, but you made a comment that it's interesting as we talk with people in different parts of the country, you hear what people's different challenges are and their different advantages there. And sometimes you do take things for granted. And we often get people who move into our state and they think it's odd how real estate transactions work, because they're used to them from different state, and there's processes are different, and the legalities and things are stricter or not as strict. And we forget that real estate is such a market specific industry, almost like no other industry out there.
Yeah, very true. Very true. Pros and cons in every market though, right, Adam? You know, we've got a lot.
Sammy, I got to ask you this. You guys are a cash market. What's the most cash that someone's ever given you, like in a bag or an envelope, or that you've given someone like for a deposit or just a transaction? What's the most cash you've held?
Like physical cash?
Physical cash.
Oh, I've got a funny story of people showing up to a closing with 6 figures in cold hard mattress money and be upset with all of us as to why they couldn't buy the house using that. You know, that is probably happening once a month across our area here. We get
once a month.
Yeah,
once a month, huh?
Yeah, I'm not the only person with that story of people showing up with, you know, 200 grand in cash or 300 grand in cash, you know, and the money, you know, you get old bills in there, like the old $100 bills in there. Like, it's not uncommon to happen up here. Regularly, people show up to the brokerage with $5,000 in cash as a deposit, and we're like, where do I go with this, right? You know, what if I get robbed as I walk out of here? Like, what is, you know? So we're a little bit behind. You know, crypto really hasn't taken off.
Although maybe that's the place where crypto should jump in.
It should, right? You know, these people with these concerns, you know, the people that live around here, very old fashioned. They love crypto.
Right. Maybe that's why you guys have to have all those AK-47s around to protect yourselves and stuff.
Yeah, no comment on that, Adam. You know, but you know, personal protection is popular up here. So.
Fair enough, Sammy. We'll wrap that question up, and we'll just put a bow on it and move on to the next chapter.
You got it.
I was looking to get into crypto, and then it says if I don't remember my key, I'll lose that money forever.
Oh.
And knowing how I am with password, I don't know.
Crypto's very interesting, but like I said, I'm old school. That's why I love real estate investing, because you got a tangible asset, something you can touch and you can feel. If I don't see it, touch it, smell it, feel it, it's not real to me. You know, maybe I'm a product of my environment and my upbringing, but you know, I don't have any faith in it.
So being in that market, Sammy, does it then force you to become a good capital raiser, seeker? Like you become good at raising private capital just out of necessity?
Yeah. You become really creative to keep things rolling. And I'll tell you this, I'm always broke. I'm always broke. I don't have any cash. It is rare for me to have a ton of cash sitting around because it's always tied up.
You're just saying that because you don't want to get robbed.
So,
You're from Detroit. You got to have cash stashed somewhere.
At least on a public forum, Sammy wants to announce to everybody in Detroit that he has no cash.
Yeah.
No way. I've got cash in a safe deposit box in case I'm kidnapped. That's about it. But it just doesn't. No, it's the truth. Honestly, our business is very cash intensive and it sucks up everything. We're very good at managing cash flow and juggling and using a credit card here and raising some capital here. Thankfully, we've graduated beyond having to raise private capital because that's always a tough spot to be in, to raise private money. And, sometimes you don't mesh well with the investor or their expectations are wrong. And I know contracts and all that protect you, but I'd much rather, I think we all strive when we become investors, we strive to not need that private investor. And we've graduated beyond that, but it's still a challenge. It's a challenge. We have a lot of buy and hold stuff we've been able to do now that we couldn't do then. And I think we've all had these conversations at one point or the other. I can buy houses maybe for 5 or 10 or 15,000, but that's got to be cash. The rehab's got to be cash. The holding costs are cash, and while the ROI is phenomenal, I'm 50 to 70K in cash for an extended period of time before I start generating rent. And then you can do your own math, how long it takes me to recoup that when there wasn't financing available. Now that we can get some loans in the 50 to 70K range, it's creating some new opportunities for us, but it's always a challenge.
Yeah. And so staying with the rental, so you have a lot of rentals. Have you guys dipped your toes into the short-term rental space, or are you staying with the long-term rentals?
Short-term rentals are it's very enticing, but I'm not an expert on the topic, but I will say this. There's so many ways to make money in this business, whether it's short-term, long-term rentals, to fix and flip, even getting involved in you talked about the backfill lots or buying apartment buildings. I mean, I could go on and on. There's a lot of ways to make money. We can't do it all, but whatever you decide to do, focus on it, be consistent, and apply yourself. Success isn't overnight.
So, Sammy, being in your market and being in real estate for 15 years, do you feel like at times you have to become a jack of all trades to survive?
Oh, yeah. Especially when you're first starting out. There's no money to pay anybody. All you're doing is spending money, and you got to figure out a lot of things on your own. And I'm a big proponent of you can't delegate something until you've mastered it yourself. And I know that's not true universally because obviously you have to hire to your weaknesses and so on and so forth. But at the most basic level, when we're running our businesses on a day-to-day basis, you're assigning tasks, let's say to an admin or, whatever the case may be. You have to be a jack of all trades. We're installing lock boxes in one day. We're evicting squatters on another. We're waiting for the gas company on another day, right? This is when you don't have any help. But all this stuff has to get done. I mean, one transaction probably has 100+ tasks associated with it. Let's say you're not doing them all, but from the financing to the title work to the surveys and the appraisals and the data, it goes on and on. But our portion of that is huge, and especially if you're working on marketing and you got to get out to the house, you got to manage your appointments. Obviously, lead management's huge. Managing contractors, you got to be a CPA damn near to manage your cash flow. I think I made my point there, right? I mean, if you're looking to get into this business, don't say that's not my job. That's not really got to be in your vocabulary at the beginning. You do it all. Getting dirty and driving and everything is on the table. When you make some money, then you can be picky, like me. At this point in my career, I'm like, it takes a hell of a lot to get me out of this chair. Let me just be honest at this point, it takes a lot.
Yeah, at this point where you have pretty shirt and slick hair, smooth hair, no stain on your shirt.
No stain, no spot. No.
Sammy, so Freddy's the one on the road, right?
Yeah.
So this is designed to be a sincere question, okay, even though you may think I'm being snarky. Does Freddy drive himself, or is there someone who drives him?
No, Freddy still drives himself. Freddy, he loves the field. He loves interacting with people. He comes from a retail blue collar background in his early days. So he's most at home in that environment. There are times where he can be what we call bougie. And he wants to be chauffeur driven, and he wants to do this. He wants to do that. But I think it's a matter of like, does he want to spend 7 hours in a car with somebody? Yeah.
Well, what's happened is we have plenty of rural markets within our territory, and there's a few investors now who they hire people a couple of days a week to drive them so that during their heavy driving day, they can be doing work while they're on the road. So that's why I was asking the question.
Well, I would imagine he'd have a need for that if we didn't have a partnership, right? If he was on the road having to do the things that I did, I would imagine, you need somebody to drive you.
Yeah,
you know?
Good
and
point.
it seems such a big deal to have a driver, but it's really not. You know, if you really look at it, it's not.
Exactly.
Just a matter of being better at time and task management.
Yeah.
But, it sounds cool to say I have a driver.
That's my driver out there, right?
I have a driver.
The real thing is I've seen Freddy drive, and I was going to make a recommendation to you about that for that reason.
Yeah, for the sake of public safety, huh?
Exactly.
Insurance won't disagree with you, that's for sure. I love when he gets a ticket and he comes into the office. I got a ticket today, and I was like, "What? Drive to what do you want to pay it?" So,
you guys need to get a mayor in your pocket. All the tickets.
I don't know what the statute of limitations is on these types of crimes, but listen, Detroit's a funny place. There was a time when you were able to get a lot done. Let's just put it that way. Knowing the right people. I kind of miss those days, but I know that progress requires us to graduate from that level of function, I guess, so backwards. And so it's sometimes difficult for us who are old. I hate to say this because I'm still young, but I'm old school in certain ways. And I miss being able to wheel and deal my way out of things, or getting things approved and making a phone call. Hey, go have a conversation with your colleague over. That's all done. It still happens, but obviously happens everywhere always, but it's not the Wild West that it once was.
It only take about 47 minutes for the real Sammy to come out.
Yeah. I'm not a bad guy.
Wheeler dealer Sammy.
hey, there was a time that you needed to know somebody to get anything done in this town. I mean, Kwame Kilpatrick, he's infamous, right, at this point with what he did. And that was our mayor, It's a lot of fun when he was mayor, but it was very, very bad.
Isn't that the same thing anywhere? Knowing somebody to get things done?
Yep.
Yeah, absolutely. But Pepsi doesn't want to build a bottling plant in a town where the mayor is a criminal, right? Or major Fortune 500 companies aren't going to come in here and do business that way. And I think that once we eliminated that element out of our government, it really opened up the doors to a lot of we've got Rihanna with her Fenty brand opening up a location in downtown Detroit. We've got a bunch of luxury brands coming. We've got a Nike, a flagship 2-story Nike store downtown. Now, these things were unheard of in the past. Downtown was where you went to go drink. That was it after dark. And there was like 3 square blocks that you would go to, and you leave that little area, you're on your own kind of thing. So,
and you're only allowed to go there 4 times, because the 5th time you're gotcha. Now we're learning how to walk the streets of Detroit. Gotcha.
Exactly.
That's right.
Got me there. That's the truth.
So Sammy, at what point in your 15 years that you had a turning moment or an impactful moment?
There's been a lot. There's been a lot of those. You want me to talk about a positive experience, or something that's impacted me in a positive way?
A moment that changed you.
A moment that changed me. Recently, and this one's pretty sad, and I'll say it because I think a lot of people like to just glamorize what we do, and they think it's all fun and games. And I think that has a lot to do with the Grant Cardones and all those other guys that sensationalize real estate investing and exaggerate things. We had a property under contract in Detroit when the weather was still cold, and they were heating the place with a propane heater. And Freddie was the one at the appointment. He talked to them and he warned them. He said, "Please, you guys can't do this anymore. You got to shut this off, and you guys have to find a different way to heat." But the circumstances forced them to have to heat their house some way, and we couldn't get a hold of them 2 weeks post contract signing. And we were calling and calling and calling, never got a hold of them. We finally get a call back from a family member of theirs, come to find out that they were a couple that were in this house, that they were selling it to us. They had died of carbon monoxide poisoning in the property, and that really impacted us. And it was, we've all got funny stories, and we've all seen a lot of stuff in this business, but that one hit us so hard because it was entirely preventable and it was driven by poverty. And I just wish we could have gotten to them sooner and helped them out of that situation. We were so close, you know. They were going to get a nice chunk of change and they were going to be able to restart somewhere. We just never were able to cross the finish line. And and that one hurt, definitely. That was an eye-opener for us. It made us very grateful for what we have, what we're able to do. And like I said, being, you know, 2 young people dying just because they couldn't afford to heat their house.
Yeah.
Come on.
Yeah.
You know, it's 2022. We shouldn't have that anymore.
Yeah. Thank you for sharing that story. That's the reminder to all of us to just be grateful for what we have.
Yeah, definitely. It was profound in the way that it changed our outlook on the business. Because, you know, we all say that we love helping people and we all have feel-good stories of helping people. And we do really provide a service. You know, we provide a service that really often results in a win-win situation. You know, and that's why I always stress you have to approach this in a moral way. Like you have to have a moral compass. You have to do right by people. And you'll always, you know, the good karma will always come back to you. But that story was so black and white, and it really put things in a different perspective for me, where something was so entirely preventable. And that's what really comes back over and over. And it really bothers me that, you know, it's just they're just living such a basic existence and they couldn't even stay warm, you know. But we can't solve these problems. These are not the problems for us to solve. But if we can bring awareness to these types of things, I think that goes a long way towards hopefully preventing somebody else from falling into the same trap. But yeah, it's a tough one.
That is. Okay, so let's flip it to what is something that people might be surprised to learn about you?
What might people be surprised to learn about me? Well, I weighed 50 pounds lighter at one point in my life. So that's one thing. Before I started in real estate, before I really took this as a serious profession, I was actually in music. A lot of people don't know that. I was on the business side of music, involved with promoting and management. And I got involved with, you know, putting together some songs. A buddy of mine who's still currently an artist, he's actually pretty successful in Canada and internationally. You know, that was a fun time in my life.
Michael Bublé?
No, not Michael Bublé. His name's actually Carl Wolf. He's a pop star over there. He's like the Canadian Justin Timberlake. You know, that was a big part of my life pre-real estate. A lot of people don't know that, but there you go. I put that out there today.
That's very cool, Sammy.
Yeah.
Okay, so last questions. How does the audience get in touch with you?
The audience can find me all over the place. I'm not really heavily active on social media, but I'm available. I check it often. You can catch me on Instagram.com/Sammy Abdallah, just my name. Same thing on Facebook, Sammy Abdallah. Same thing on LinkedIn, Sammy Abdallah. I snatched up my name very early on. Every time a platform launched, I save my name. So I'm easy to find there. You can Google me. You can find me. You can email me at sammy@templerg.com.
Thank you for watching the Real Estate Ballers Show. If you find value in this show, do hit that like and subscribe button now. Pretty please. Also, please help us get the words out by giving us a shout out on social media or sharing this episode with a friend. Thank you so much and see you next time.